Hi, everybody, and welcome for joining us on a Saturday morning. I want to introduce everyone to Peggy McDonough. And the reason why we're doing this is that she has such great information on Are You Tax Ready, PPP, EIDL, and Employee Retention Tax Credits, which is so important at this time. So this is going to be the final session with Peggy. But we're lucky enough that we have her webinar pre-recorded on demand on our website for a week after the live presentation, and then we put it on our YouTube channel. So I'll make sure I chat over some links to visit the YouTube channel and find Peggy's presentation, and also I'll chat over the link just to remind you how to get on the on-demand and live webinars. If you have questions, don't be shy. Please type them into the Q&A because we'll have some time at the end to answer all the questions that come in. So as I want to remind you, just type them into the Q&A and Peggy will pick them up. So with all that, I'll turn it over to Peggy McDonough.
Thank you, Leslie. As Leslie said, my name is Peggy McDonough. And I am actually a SCORE certified mentor. And SCORE and New Mexico Small Business Development Center, we work together in collaboration to provide small business owners with professional training and support. So today's webinar is an example of this collaboration, and I certainly hope that you'll find your time today productively spent and useful for your business. So let me go over a few administrative items here. We do not monitor the chat function during the webinar. So please, as Leslie said, if you have any questions, put them in the Q&A slot. And if you have a particular slide that you have a question on, if you'll put the slide number in there too, that will help us zoom in on what your question is. And again, we will address all of your questions at the conclusion of this webinar. Now, SBDC is prohibited from giving tax or legal advice. So if you have any tax-related questions, accounting questions, or any specific questions about your company situation, they can only be answered with credible authority by your accountant or attorney. So please keep in mind also that the information that we're covering today is changing rapidly, and is based on current understanding of the programs. It can and has changed through the weeks that I've been presenting this. And although we will be monitoring and updating this webinar as new information becomes available, please don't rely solely on this for your financial decisions. We encourage you to consult with your lawyers, your CPA, your payroll experts, and your financial advisors. So what are the expectations and some of the goals that I'd like you to walk away from today's webinar? Well, I'd like you to walk away with a better understanding of the tax impact for various COVID relief programs that have been signed into law by Congress in the last year and a half or so. We'll be starting with the Coronavirus Preparedness and Response Supplemental Appropriations Act, and that was signed into law on March 6th of 2020. And we'll be ending with the most recent American Rescue Plan Act, which was signed and extended by President Biden on March 30th of this year. I would like you to leave here today more knowledgeable and with guidance on what questions you need to be asking your CPA, your tax attorney, or payroll professionals in order to make the best decisions for your business. We're actually going to be focused on 3 specific programs. We're going to talk about the Payroll Protection Program, the Economic Injury and Disaster Loan, grants, usually called EIDL, employee, and also last but not least, the Employee Retention Tax Credit, ERTC, or sometimes just called ERC. We're going to be reviewing the timeline and the background for all of these programs. We're going to talk about specific tax implications, as well as a lot of frequently asked questions. And as I said, at the end of today's webinar, we'll be answering any questions that you may have. So let's get started. It's been quite a journey, as you know. On March 6th, 2020, Congress signed into law the Coronavirus Preparedness and Response Supplemental Appropriations Act. Now, that act declared the coronavirus or COVID-19 outbreak a disaster under the Small Business Act. And this opened the door for the SBA to use its lending authority to make EIDL loans for small businesses that have been impacted by the pandemic. Then just a couple of weeks later, we have the CARES Act, the Coronavirus Aid, Relief, and Economic Security Act, and it was signed into law. And it actually started a lot of these programs. It created the Payroll Protection Program, PPP, and it provided nearly $349 billion for PPP loans. In addition, in early May of 2020, Congress added some more funding of $320 billion. It also introduced a grant to the EIDL loan program, and that was to pay the SBA EIDL applicants an advance on their EIDL loans. And these advances were treated as tax-free grants and did not need to be paid back. And the funds were exhausted very quickly in July of 2020. And the third one that they also created with the CARES Act was the Employees Retention Tax Credit. The ERTC is a fully refundable tax credit for employers equal to a percentage of qualified wages, including qualified health plan expenses that eligible employers pay their employees. In December of 2020, they had the Consolidated Appropriations Act. And embedded in that act was another $900 billion in COVID relief. 300 of that 900 was in aid for small businesses. 284 billion to SBA for the first and second, what they call draws for the PPP forgivable small business loans, and 20 billion to provide EIDL grants to businesses in low income communities. Then in March 11th of 2020, they had the American Rescue Plan Act, and that was 1.9 trillion. It was voted on March 10th and it was signed into law by President Biden on March 11th. And among many other things, it provides small business assistance, including specified programs for restaurants and live venues. And last but not least, in March 30th, there was the PPP extension law in which President Biden extended the application deadline for the PPP. Now, as you can see, as each of these laws were created and signed into law and more money was funded, these programs, each time it became more specific and more specific for the small businesses to make sure that people got the money that Congress wanted them to get, and it became more narrow in a lot of the definitions. So how do you interpret what exactly did Congress mean? Because when they create these laws, there is a lot of vagueness in them. There's a lot of organizations that are impacted. You have the IRS that's impacted, the SBA, the banks, CPAs, and of course yourselves as business owners. Now, Treasury and IRS tax laws and guidance have lagged, and they're confusing, and in some instances, they're actually contradictory messages. There's new forms that were created, there were new applications that are created, and these have continued to evolve through the life of these programs. So there's confusing interpretation and constantly changing environment. And this means that you're going to have to deal with business situations and tax implications that you've never seen before. So let's first go into the PPP program. Now, when Congress created this program, they really wanted it to act as a grant program for small business owners. And when they started out, I think the application was 15, 20 pages long. Now that application is down to 1 page for forgiveness. So there's been a lot of evolution in this particular program. So it covers an 8 to 24 week period, and the first draw, PPP loans can be used for to help fund payroll costs, including benefits, and may also be used to pay for mortgage interest, rent, utilities, worker protection costs related to COVID-19, uninsured property damage costs caused by looting or vandalism during 2020, and a certain supplier costs and expenses for operations. But unfortunately, the money was scooped up by large businesses very quickly, and they left a lot of the small businesses unable to apply for this program. Then came the second draw, and that was in the Consolidated Appropriations Act that was passed late December of 2020. And that allowed certain eligible borrowers that previously received a PPP loan to apply for a second draw with the same general loan terms as their first. The PPP loan application ended in May of 31st of 2020, and we're now into the forgiveness section of that particular program. Now, there is a loan forgiveness clause, and a borrower can apply for forgiveness once all loan proceeds for which the borrower is requesting forgiveness have been used. Now, borrowers can apply for forgiveness anytime up to the maturity of the loan. If borrowers do not apply for forgiveness within 10 months after the last day of the covered period, then PPP loan payments are no longer deferred, and borrowers will begin making loan payments to their PPP lender. So to apply for forgiveness, please work with your PPP lender. And the SBA does offer free counseling and training events to help you with the Paycheck Protection Program. And it's at this point that I'd also like to say that in the last month or so, and that shows you how quickly evolving and changing these programs are, the Small Business Administration created what they call a direct forgiveness portal. Now, this portal the purpose of this portal was to help these small lenders who found the bureaucracy of the paperwork was a little overwhelming, and it was slowing down the program itself. So SBA created this program or this portal, and the borrowers have to opt in order to use it. And it's usually, like I said, small borrowers. If you have a PPP loan through a Chase Manhattan or a Wells Fargo, they're going to be on their own portals. And at this point in time, over 1,300 lenders have opted into this program. It's very easy. If you as a small business and you have a PPP loan and you want to apply for forgiveness, all you have to do is you can get directly into this portal on the Small Business Administration website and register. You can search for your loan. What you do is you type in your EIN number and your loan amount, and it'll go out there and look. Now, if your lender is in this program, it should find your loan. Your lender also should have reached out to you to let you know, but some of the lenders have not done this. But this is a way that you as a borrower can search and see if your loan is out there. What happens with it, if your lender has opted into this program, you can fill out this very quick application, and then you register, you fill out the application, it goes to your lender for approval, then your lender sends it to the SBA for approval, and it gets taken care of very, very quickly. Now, the good thing about this is because a lot of these PPP loans are small dollars, they're under $150,000. And those loans go through pretty quickly. The documentation you have to provide is very minimal. And in some of these instances, this is getting done in a week. So this is how improved this whole process has been for the small business owner. Now, the CARES Act, let's talk about some of the tax implications with this program. The CARES Act spells out that the forgiven loan amount won't be included in taxable income. So you don't pay taxes on the money that you receive. This loan is to provide businesses with the money to keep running and continue paying their employees. And it was never meant to create a tax burden for businesses receiving the funds. And with the passing of the CAA Act, the Consolidation Appropriations Act in December, there was more clarity on how the expenses covered by a PPP loan will be treated. Previously, anything you spent your PPP loan on was not going to be tax deductible. Now, these expenses are tax deductible. So simply put, your loan will not affect your tax filing process. Forgiven PPP loans are not taxable historically and forever. If you have a business loan and it is forgiven, that is automatically taxable income. It's been in the Internal Revenue Code forever. However, with Paycheck Protection Program loans, they break from that code. And Congress specified, and the IRS has clarified, that forgiven PPP loans will not count as income. And this applies whether your entire loan is forgiven or just a portion. This loan is to provide businesses, as I said, with the money to keep running and continue paying their employees. And it was never meant to be a tax burden for businesses receiving the funds. So simply put, your PPP loan will not affect your your tax filing process. Now, though Congress has walked back the IRS stance on the PPP and its relation to deductible income, that doesn't necessarily mean you can leave those funds out of conversations on your taxes. Whether you receive PPP funding in its first iteration or later on in 2021, you should still be careful. Oh, here comes my cat. Get her down. Sorry about that. Whether you receive PPP funding in its first iteration or later on in 2021, you still need to be careful when it comes to taxes. And there are still a lot of unanswered questions. And some of these questions stem from confusion in the PPP application process itself. In some cases, application woes meant businesses received money that they weren't really qualified for in the first place. For example, a company might have stated that it had employees when it only had really independent contractors. And while that may seem like a case of semantics, that kind of difference could have major implications when it comes to filing your business taxes. It's always important to know how your funds were used and keep that in mind. Any money that the business owner used to pay something else that is not included in the PPP requirements, that will have to be reported as income and expenses on their business tax return. Keep clear and concise bookkeeping. Your signed PPP loan contract stated you would produce monthly government-ready financials. You are required to have bookkeeping in place, and if you don't, you could suffer penalties and fines or trouble with an audit. Separate accounts help you to identify your PPP loan. It's also important to adjust your tax planning estimates to include any PPP estimates that were formally non-deductible. Now, if you received a PPP loan, and I'm talking about the larger loans here, please expect a tax audit. In recent months, the SBA and the US Treasury have announced that all PPP loans in excess of $2 million are going to be audited. Now, loans that are less than $2 million are subject to an audit, and much lower loans have been and will continue to be scrutinized. There is a higher probability that the IRS will audit you, and they now have a hotline for anonymous callers to report any possible fraud. So how do you ensure a smooth audit process if this does happen to you? Don't procrastinate. Begin compiling your documentation as soon as possible. Keep all your records, your receipts, your statements, your payroll records, and your PPP documentation. They should all be kept on file for at least 6 years after your PPP loan is fully repaid or forgiven. Make copies to send, but always retain your originals. And hire a CPA who can represent you and defend your business against the IRS if necessary. Does my PPP count as taxable income? As I said, no funds from your PPP loan, whether forgiven or unforgiven, are counted as taxable income. You will also be able to claim a deduction for expenses using your PPP funds. Well, what about if my PPP loan is not forgiven in full? Does that mean it counts as taxable income? As with other business loans, funds from your PPP loan that are not forgiven do not count as taxable income. Another question, can I write off payroll and other business expenses if I used a PPP loan to pay for them? If you received a PPP loan and your loan was forgiven, you can write off payroll and other expenses that were paid for with these funds. Expenses that were not paid using PPP funds can still be written off as usual. And even if your PPP loan was not forgiven, payroll and other business expenses may be written off on your tax return. Can I use my PPP loan to pay business taxes? And this is an absolute no. Funds from your PPP loan may only be used to cover payroll costs, utilities, rent, or lease payments, or mortgage interest. PPP loan proceeds can't be used to pay business taxes. Can I defer payroll taxes and receive a PPP loan? Businesses that have received a PPP loan can still defer payroll taxes through the end of 2020 as well as 2021. And again, will PPP loans be audited by the IRS? According to the U.S. Treasury, all PPP loans that exceed $2 million will be audited, and the rest can be audited and are subject. So please be prepared unless you, if you in fact do end up in that category and get an audit. Now, one of the things that we're lucky here in New Mexico is our state does not tax forgiven PPP loans, as you can see from this, this graphic here. New Mexico is green. Now, I do recommend that you confirm that with your CPA, because times do change, things change, and this could change. But at this point in time, New Mexico does not tax forgiven PPP loans. So now let's talk a little bit about the EIDL, or the Economic Injury Disaster Loan. The Economic Injury Disaster Loan is a loan option, and it's available through SBA to help businesses that are struggling with financial hardship due to COVID-19. And this particular, the SBA has had disaster loans that have been available for years, and the EIDL was signed into law in March of 2020 as part of the CARES Act and specific to COVID. If you're a small business, nonprofit organization of any size, or a U.S. agricultural business with 500 or fewer employees that have suffered substantial economic injury as a result of COVID-19 pandemic, you can apply for the COVID-19 EIDL. Now, these loans do not go through a lender. They come directly from the Small Business Administration Disaster Assistance, and there is no cost to apply. You can find this application at the disasterloan.sba.gov site. Now, there is something new that has just come up here recently in the last couple of weeks, and that is that the EIDL is now, they call it EIDL 2.0. And this particular EIDL change for this money is specific to the Delta variant. And they've expanded. They had a $500,000 cap. That cap has now been expanded to $2 million. They've also expanded the uses that you can use these loans for, and they've also simplified the process. So there is still time also, if you do apply for this, there is still money and there's still time for the additional grants that I'm going to go over. You can get up to $15,000 in grants, and that money is still available. Now, the EIDL is a loan, and it's treated the same as any other business loan as far as taxation is concerned. In other words, funds from the EIDL are not reported as taxable business income on your tax return. Now, let's talk a little more specifically about the EIDL grants that are out there, because there are two of them. Small businesses that are impacted by COVID-19, you might be eligible for what's called a targeted EIDL advance grant of up to $10,000. You can also be, might be eligible for a supplemental grant, which is an additional $5,000. Now, these grants do not have to be repaid, and the SBA is now encouraging all eligible businesses to apply. The grant program was part of the initial CARES Act in 2020, but as I said, funds were exhausted within weeks. So in December, Congress allocated additional funds for the program and established more targeted eligibility criteria. So to be considered for one of these grants, your business must meet the eligibility requirements and apply or have applied for an EIDL. However, you do not have to get or accept the loan in order to get the grants. So do I qualify for an EIDL advance or grant? You need to be, what do I do to qualify? You need to be located in a low income community, and you need to have suffered an economic loss greater than 30% and employ not more than 300 employees. In addition, the business must qualify as an eligible entity as defined in the CARES Act, which was back in March of last year. A small business, cooperative, ESOP tribal concern with fewer than 500 employees. You have to be an individual who operates as a sole proprietorship with or without employees, or an independent contractor, or a private nonprofit or small agricultural cooperative. The business must have been in operation by January 31st, 2020, and the business must be directly affected by COVID-19. So what exactly is economic loss definition? That's the amount by which the gross receipts of the covered entity, your business, declined during an 8-week period between March 2nd, 2020 and December 17th, 2021. It's relative to a comparable 8-week period immediately preceding March 2nd, 2020, or during 2019. So how do I demonstrate an economic loss? Well, that's by getting your business tax documents organized and up to date, and because they're going to be essential to applying for this grant and demonstrating whether you qualify. All right, that's good. But what is a low income area? The SBA has released an online tool to help borrowers understand if they're in a low income area. And please note that it's the business address that needs to be located in a low income community in order to qualify. So SBA encourages potential applicants to check the map to see if they meet the low income eligibility requirement before you apply. Now, this map and this application is on the SBA website. And what you do is you type in the zip code for your business, and it will take you to a map that indicates whether you will qualify because you're in a low income area. So let's talk a little bit about the supplemental grants. The American Rescue Plan includes $5 billion in funding for supplemental targeted advances of $5,000 to the hardest hit businesses. So how do you qualify? You need to have suffered an economic loss of greater than 50% and employ not more than 10 employees. This grant is in addition to the $10,000 targeted EIDL grant. The SBA will reach out to small business owners who applied for the targeted advance if they appear eligible for the supplemental. So again, getting your business tax documents organized and up to date will be essential in applying for this grant and demonstrating whether you qualify. Now, let's talk a little bit about the tax implications. Initially, funds from EIDL advances were to be reported as taxable income. Now, this decision was reversed under the Consolidated Appropriation Act in December of last year. It does not need to be included in your taxable income when filing taxes. And additionally, qualifying expenses can be written off to lower your tax liability. Legislation clarifies that EIDL grants are not taxable at the federal level, that businesses who receive them will not be denied a tax deduction for qualified expenses paid for with these funds, and that EIDL grants will not be deducted from PPP for loan forgiveness purposes. So please check with your advisor about the tax implications at the New Mexico state level or local level. Will EIDL loans be audited? Yes. When you receive your EIDL loan, you agreed to spend the funds provided for certain business expenses. As part of the loan agreement, you agreed to maintain records, provide those records to the SBA to be audited if necessary. Now, while there's always a chance you may not be audited, please don't skip this critical step. Maintain your records and be prepared to respond if an audit occurs. Does a grant count as taxable income? In most instances, grant funds are not counted as taxable income with your federal tax return. How do I qualify for a targeted EIDL grant? If you previously applied for an economic injury disaster loan, you will receive an invitation by email inviting you to apply for the targeted grant. If you have not yet applied for EIDL, you can do so by going to the SBA.gov website. If your business appears eligible, you'll be invited to apply for the targeted advance. You do not have to accept the EIDL loan or even be approved for the loan to get the grant if you qualify. Well, what if I never applied for EIDL? If you have not previously applied for EIDL, you may apply at sba.gov. You will be able to apply for the low interest rate loan through December 31st, 2020, as long as funds are available. If it appears your business also qualifies for the targeted advance or a supplemental advance, the SBA will invite you to apply. Now, it's at this point that I want to also bring to your attention, as you know, there's a lot going on in Congress. And one of the bills that they're looking at is the infrastructure bill. It's a huge bill. And right now, written into that draft is that they are going to sweep up any EIDL funding that has not been allocated. So thank goodness Congress works in a slow process, but I do want you to be aware that that is part of the bill, and they do have funding right now. They do have that improved process. They're improving their application process. So if this is something that you think you can apply and qualify for, I would highly encourage you to get in line and get in the queue and get your application in, because once that bill is signed, they will be sweeping up any funds that have not been allocated. Can a EIDL loan be forgiven? No, EIDL loans, not advances, must be repaid over 30 years. And unlike PPP loans, there is no forgiveness process for these loans. Can I apply for a PPP or Paycheck Protection Program? Yes. Paycheck protection loans may be fully forgiven if they're spent on certain expenses, which essentially turns them into a grant. And as I said, now that the PPP loan program is closed to new applicants, but we are in the forgiven portion of this loan program. However, if your business did receive a PPP loan, you may still be eligible for an EIDL loan or grant. So you can have both of them. Businesses may apply for both PPP and EIDL if they qualify. So next up, what I'd like to talk about, and this is a really good program. This is called the ERTC, or Employee Retention Tax Credit. The Employee Retention Tax Credit is a tax credit first put in place last year, and it's as a temporary coronavirus relief provision to assist businesses in keeping employees on payroll. Now, all of these programs have always been meant to be temporary, from the PPP through the EIDL through this ERTC program. Since then, the ERC has been significantly expanded, and in the most recent relief bill in January, the ERC has been extended for all of 2021. Now, I do want to mention at this point that this particular program is also in the provisions for this infrastructure bill, that they are going to end the program earlier than the end of 2021. So I want you aware that this is another area that Congress will be looking for funding for this infrastructure bill. So it has a potential of ending sooner than the end of 2021. Now, the other thing to be aware of is there are very different rules between 2020 and 2021. In 2020, you had to have 100 or less qualified full-time equivalent employees. In 2021, they upped that to 500. In 2020, they had a tax credit of up to 50% of 10,000, and they upped that also in 2021 to 70% of 10,000. So it really improved between the 2 years. Now, this tax credit is available to businesses with fewer than 500 in 2021. Employees who either were suspended or partially suspend their businesses due to COVID-19 because of government order, and experienced a 50% or 20%, depending upon which year, decline in gross receipts when compared with the same quarter in the previous year. Now, we all know there are a series of New Mexico government health orders that occurred in 2020 and 2021. And each order was effective for different dates, for different businesses, and had different provisions. So for details on who was impacted and the dates when orders were effective, there is a website that you can go to, that will give you all of the details on this, so you can tell when your business was impacted and how your business was impacted if you want, in order to qualify for this. Now, these tax credits are incredibly valuable because, unlike a deduction, which reduces your taxable income, tax credits reduce your tax liability on a dollar-for-dollar basis. The credit is calculated per employee and is 70% this year, 50% last year, of up to $10,000 in qualified wages paid per quarter. Now, qualified wages include the portion of your employee's earnings you pay and is reported on your IRS Form 941. Now, is this credit taxable? Well, yes and no in a way. The credit is, yes and no in a way, the ERC credit is subject to income tax. So the wages on the claimed credit must be reduced by the amount of the credit, which results in the credit being somewhat taxable income. The reduction in wages may also impact Section 199A of eligible wages for purposes of the 20% qualified business income deduction. If the credit is claimed on 2020 payroll taxes, after the tax return has been filed, you can file an amended income tax return, and it may be required to accurately exclude wages that were reduced for the ERC. And most important of all, if there's a takeaway from this slide, there's no double dipping between PPP and ERTC. Both of them are payroll, impact payroll. So let me give you an example. The first one I'm going to go over, it's purely a theoretical company. It's not a real company. It's called Star Technical Support. It's a small business in Roswell, New Mexico. Again, it's theoretical, strictly out of my head here. When comparing Q2 of 2020 to Q2 of 2019, Star experienced a 55% decrease in gross receipts. Now, in order to qualify in 2020, a greater than 50% decrease must have been met, and the business qualified. In Q2 of 2020, Star also received $12,000 of PPP. Star Technical Support has 5 employees. Each full-time equivalent employee is paid $8,000 per quarter, and that includes health insurance benefits. So in Q2 of 2020, Star paid their employees $40,000. That's the 5 employees times the $8,000. Now, ERTC is at 50% of qualified wages. So you take 50% times 40,000, that equals 20,000. But you need to deduct the PPP. And that still gives you a credit, though, of $8,000. Now let's take a second example. This one, again, is a theoretical company. It's Fred's Fantastic Car Wash, and they're located in Los Lunas. When comparing Q1 of 2021 to Q1 of 2019, Fred's Fantastic Car Wash experienced a 25% decrease in gross receipts. Now, in order to qualify in 2021, you had to have a greater than 20% decrease in it. That must be met, and the business qualifies. Fred's Fantastic Car Wash, they have 10 employees, and each employee is paid $7,000 per quarter, again, including health insurance benefits. So in Q1 of 2021, Fred paid their employees $70,000. That's 10 employees times 7,000. Again, in 2021, ERTC is now at 70%. So you take 70% times $70,000, and they have an ERTC of $49,000 in credit, with an annual estimated credit for 2021 of $196,000. That's a lot of money for a small business person. So let's compare the differences between the 2 years. Again, in 2020, you had to have 100 employees or less. Now it's 500. That had a gross receipt decrease in 2020 of 50%. Now it's 70%. And the wage credit, now it's 20%, I'm sorry. And the wage credit per employee was 50%, and now it's 70%. A lot of good things between the 2 years, giving more money back to the small businesses. So how do you apply? Now, if your business was not in existence in 2019, you can use the average quarterly wages that were paid in 2020. Exclusions, you cannot use the owner's pay or the owner's relatives' pay when calculating wages. Now, there has been some more guidance that just came out a couple of days ago on this. There's been a lot of discussion. There's been a lot of confusion. If you are an owner, I would reach out to your CPA and talk to them about whether this has been cleared up, because there has been a lot of discussion about it. You file to apply this credit using your standard quarterly form 941. If you want to file in advance, there's a form called 7200 advance payment of employer credit due to COVID-19. And if you haven't taken advantage of this in either 2020 or 2021, you can file retroactively using form 941-X, which is the adjusted employer's quarterly tax return. Well, how long do I have to file for tax credit? Ladder of 3 years after the original filing or 2 years from paying the tax. Now, I really encourage you to get professional guidance and support when filing for this, because there are a lot of nuances and there's a lot of documentation coming out clarifying, and there's a lot of contradictions too. So get advice and help from your payroll expert, preferably a professional who's well informed on current interpretations. Now, while the ERC is certainly a taxpayer-friendly relief provision, the IRS is just not giving dollars away. Looking at taxpayer submissions both at the front end and then auditing them down the road. So the best practice is for a business to provide contemporaneous documentation now when first determining whether they qualify. To avoid headaches and heartaches down the road, businesses need to have counsel to properly and fully document and paper how the business qualifies for the ERC. Business owners need to be aware as to whether their company qualifies for the ERC, and please don't miss out on this terrific tax incentive. So here are a few of the frequently asked questions that small business owners have. I can't claim ERC if I've already claimed PPP or gotten my PPP loans forgiven. Now you can claim both. Congress, in the Consolidated Appropriation, the CAA, removed the limitation on only claiming one or the other. PPP will only account for 2.5 times your monthly payroll expenses, and it is meant to be spread over 6 months. This leaves plenty of uncovered wage expenses for claiming ERC. My business did not have a drop in gross receipts of 50% more. The CAA has changed the qualifications so that a reduction of 20% now qualifies. But remember, there is another way to qualify for ERC. If your business has been subject to a partial or full suspension due to a government order, you can qualify for ERTC. I see we have a hand raised. Please, if you have a question, please ask it in the Q&A, and we'll go over that at the end of the webinar. Thank you. My business was not shut down during the pandemic. Even a partial suspension order by the government, federal, state, or local of your business could potentially qualify. A partial shutdown, a disruption in your business, inability to access equipment, having limited capacity, shutdowns of your supply chain or your vendors, and I think everybody's experiencing this, reduction in services offered, reduction of hours to accommodate sanitation, shutdown of some locations and not others, and shutdowns of some members of a business are all scenarios that still potentially qualify for ERC. Key considerations are due to government ordered partial or full suspension. Is or was your business not able to continue its activities in a comparable manner? And did that result in a more than nominal impact on business operations? Remember, the partial or full suspension is an alternate way to qualify for the ERC, and it's separate from the reduction in gross receipts tax. It's not that you have to have both. It's an either or. My company was deemed an essential business, so I do not qualify because of business suspension. So even if your business is deemed essential, an impact or change in your business may still qualify you. For example, if you were open, but your vendors were closed down, or you can't go to a client's job site, you may still qualify. Or alternatively, if part of your business was considered non-essential and was impacted by a government-ordered suspension, you may also qualify. Well, my company has grown during quarantine. This isn't something I should take. Well, it's great news that your company grew. But if your company has grown during quarantine, but experienced a full or partial suspension, there are expenses that may qualify. Sales have rebounded for us in Q1 of 2021. I can't qualify for this credit. With the introduction of the CAA, you have the option to look at 1 quarter prior to determine qualification. This means you can determine eligibility based on less lost revenue in 2020. Also, if you were subject to a full or partial suspension, you may qualify regardless. Well, we were in losses or do not have any tax liability. This is a refundable credit. In practice, this means that any credit overage above tax liability is sent to the taxpayer or business owner as a refund. My company has grown to over 500 employees, so we are not eligible for ERC. The employee count restriction is based on full-time equivalent employees, which is a more involved calculation than just going out and counting the number of people that you have in your office or that you have working remotely, as the case may be. If you paid any employees to not work or to work less than the hours for which they were paid, then the employee count restriction would not apply for those employees. I'm a charity, and the ERC is only for businesses. The ERC also may provide significant benefit to charities, churches, nonprofit hospitals, museums, etc. Charities can be particularly good candidates for ERC. Failure to document the tax man cometh. The ERC is a refundable tax credit and it provides robust benefits to the small business owner. If you had to draw up a tax provision that makes the IRS lie awake at night, it would be a refundable tax credit involving real dollars. There are a lot of nuances for filing for this credit, so make sure you work with a payroll professional. Make sure you get the full credit you are eligible for. So let's get a brief recap of what I've talked about today. So what is the process? Well, Congress votes, they enact laws, and they provide funding. The IRS, the Small Business Administration, the state and local governments, they interpret the law and the tax implications. New forms are created and reporting requirements. CPAs follow these interpretations and provide guidance to the taxpayers. And what does this result in? A lot of confusion, a lot of restating, a lot of clarification, and a lot of contradictions. One of the reasons that because of this process and because of this turmoil, that's why the deadline for the 2020 tax filing was moved out to May 17th. There was a second round of PPP. There were changes to the employee retention credit that still needed to be understood. There was continued stay-at-home orders, making it difficult to access taxpayer data, and the IRS is short of staff due to the COVID-19 pandemic. So your 2020 and your 2021 taxes are likely going to look a little different than they normally do. This means you're probably going to deal with situations you've never seen before, including forgiven loans, grants, and unemployment benefits. So it's important, critical, that you keep accurate and up-to-date set of books, such as your balance sheet and your income statement, that you track and categorize all your business expenses on both balance sheet and P&L, that your receipts and invoices should be digitally filed and recorded, and take the time because it's well worth the effort to be able to see where your money is going and ensure you'll be able to get the most of your eligible deductions come tax season. Again, please keep in mind, this information is changing rapidly. As I told you, just a new IRS clarification came out about the ERTC a couple of days ago. And we've got the new portal that the SBA has just created in the last few weeks. So please keep in mind that information is changing rapidly, and it's based on a current understanding of the programs. It can and still is and will likely change. Although we'll be monitoring, as I said, and updating as new information becomes available, do not rely solely on this presentation for your financial decisions. We encourage you to consult with your lawyers, your CPAs, your payroll experts, and your financial advisors, but make sure that whomever you consult with, they are up to date on the most recent guidance from SBA, IRS, or US Treasury. It is at this point that I'm going to go ahead and go into the Q&A portion of the program. Leslie, I see that we have one question out there.
We have some in chat too, so let me pick the ones out of chat for you.
Okay.
The first question is, since 60% of PPP needs to go to salary, is that salary to sole proprietor, if forgiven, reported as salary, withholding tax, Social Security, and then the second part of that is periodically?
Well, that is a question that I'm going to ask you to refer to your tax specialist on that. One of the things that we do not give is specific tax guidance. The purpose of this particular webinar is to give you the knowledge so that you can go to your tax authority and ask them specific questions like that. And hopefully we've given you the guidance to do that. But thank you for the question.
Thank you. Does employee tax retention, okay, and I think this is along the same lines, but let me read it anyway. Does employee tax retention apply to sole proprietor, quote unquote, employee?
There is some discussion on that, and there is some tax clarification that's come out. Again, I'm going to refer you to your expert because they should be up on the interpretation of this, because there has been a lot of discussion about sole proprietors. And so, some is saying, yes, it is, and some is saying, no, it isn't. And that's why this new clarification has come out here in the last couple of days.
Okay, and then we have a question that came in. Do you have any resources or information on grants for new business?
Leslie, is there, do you at the SPDC
yes.
You do on your website, don't you? Okay.
Yes, well, I wanna kind of mention this is that resources and information for your new business and also on grants is available through SBDC New Mexico. You go to the website, you sign up for the no cost confidential counseling. And what we will do is we have 19 local centers. We will help you with making sure that we get you in with a local advisor. So someone that's near you, you can sign up for the counseling. But the counseling is not just that one-time counseling. We can help you not only on new business, but we can help you every step of your business. So you're going to be sending, I'm going to be sending a follow-up email, and it's going to have links that you can pick up and sign up for the no cost confidential counseling. I also put it through in the chat. You'll also get a copy of the slide presentation, and it'll have it there. So we want to make sure that you get the information that you need to help you every step of the way. So don't forget that. We'll take care of that. Okay, and then we had someone, and let me see, I believe we had someone raise their hand. Are you okay with allowing them to talk, Peggy?
Yeah, we did. I asked them to put their question in the system. So hopefully that's what they did.
Okay, Nicole says, thank you. Yes, Nicole, we're here for you. And we need the person that raised their hand, if they could please type their question in. to the Q&A. That way we can pick it up and we can answer it. So let's see.
Exactly.
Okay, and right now we'll give it just a minute while we're waiting. I did want to, Peggy's about to wrap up and the question came in. Let's see. Okay. This is a long question. Let me see. This may be for an accountant or tax attorney, but I'm going to go ahead and read it to you.
Okay.
Is changing the status of the business from sole proprietor to an LLC, SM LLC, in the middle of the tax year, such as 2021, problematic for the long term? My lender has said that it is not a problem, but we didn't discuss the longer term. I have closed the sole proprietor. Should I reinstate it until the PPP loan is forgiven?
Yeah, you're absolutely right, Leslie. I'm going to encourage them to talk to their CPA or their lawyer about this particular question. Not knowing the particulars of your business or the additional information, I think that's the best source to give you guidance on that question.
I agree. With a specific question like that, I think that would be good. We do have a lot of YouTube videos too, so definitely check those out. Talk to your tax advisor, talk to your attorney, and get the information. Okay, that is all the questions right now. And that is it.
Okay, I want to thank everyone for your attendance, and hopefully you were able to, this will be able to give you questions, information, and additional information that you can go to the people that are helping you with your business to, because I hope you understand the programs a little better and where you can go to get answers. So please, as Leslie said, the information will be going out to you. So please take advantage of it. It's been a tough year and it continues to be so with, particularly with the Delta variant that's come about. Leslie, thank you for helping me through these webinars. You've been a great source and I really appreciate it.
And thank you, Peggy, because you give such valuable information. And like you said, it's a changing environment. So it's good that you kind of kept us with a kind of an overview, at least, so we know the terminology. We kind of know what we can take, like you said, to our professionals to seek the guidance that we need. So yeah. Thanks as always. And I'll see you again soon.
All right.
Bye,
Thank
everybody.
you guys. Bye-bye.